Hi friends, good evening and thank you very much for coming here for the FY17 and annual and Q4 earnings. It's my pleasure to introduce to you almost brand new management team, starting from on your extreme right, Mr. Ramakrishnan V, our new CFO, then Mr. N.G. Subramaniam, our new COO, Mr. Rajesh Gopinathan, now our new CEO, and of course, Mr. Ajoy Mukherjee, our global head of HR. So as usual, can I request Rajesh to make a few opening comments, after which we'll take questions.
Thank you, Pradipta, and good evening to all of you. We finished this year FY17 with a revenue of 118,000 crores, with a revenue growth of 8.3% in CC terms, adding $1.4 billion in constant currency dollar revenue. So in terms of reported dollar revenue, we concluded the year with $17.58 billion, which is a growth of 6.2%. From an operating margin perspective, our operating profit crossed 30,000 crores for the first time. We ended with $4.52 billion of operating profit. Operating margin of 25.7% for the full year. Coming to net margin, again we had a fairly strong year, closing the year at 22.3% in terms of net margin profitability, and total reported net profit of 26,300 odd crores. From a cash flow perspective, we had a very strong year. Our cash conversion rate crossed 100% for the first year at about 103%. And cash from operations, we generated about 26,900 odd crores, 27,000 odd crores from it, a growth of more than 15% on a year-on-year basis. So that's the summary financials from an annual perspective. Looking at it from a segment perspective, if you look at markets, our North American business grew 7.5%, UK grew slightly more than 6%. But our best performance came from continental Europe, which grew at 13.5%. India also had a good year, growing more than 10%. And other regional markets also did quite well. So overall growth across all markets, with Europe leading with a very strong 13.5% growth. From a vertical perspective, once again, broad-based growth across verticals. Our largest segment, BFSI, grew at 7.5% for the full year, with some of the relatively smaller ones like manufacturing, life sciences, communications, travel and hospitality, energy, all of them recording more than 10% growth, double-digit growth. Similarly, from a service line perspective also, the newer service lines like infrastructure continues to grow very well, but digital as a service has crossed $3 billion. We generated $3 billion in digital in FY17, and it accounted for 16.7% of our revenues for the full year. When we look at it from a people perspective, we added about 33,400 odd people in the year net to close the year with 387,000 people. Our attrition continues to track downwards, and we continue to enjoy the industry's best retention rates. So overall, across financial performance across markets, service lines, performance in new services like digital, and in terms of employee metrics, we had a fairly satisfying year in a challenging operating environment, with challenges coming both from the economic side as well as from the financial markets in a currency perspective. So quite happy with the way we have ended the year, and sets us up with confidence for the year ahead. We'll spend a few minutes in terms looking at it from a quarterly perspective, the Q4 perspective. We ended Q4 with a revenue of 29,642 crores. In constant currency terms, we had a growth of 1%, and we lost about 1.3% due to currency volatility during the quarter. ending the quarter with reported INR revenues of 0.3% down. From an operating margin perspective, similarly, our constant currency operating margin was at 26.1%, whereas due to currency impact, we have a reported margin of 25.7%. And net margin perspective, for the full year, we did 22.3%, and for Q4 also, we have a same 22.3% net margin with net profit of 6,600 odd crores. The cash conversion for the quarter also remained very strong. We have more than 100% cash conversion this quarter also, with free cash, the cash from operations to revenue of more than 25% and generating close to 7,500 crores of cash in this quarter. So overall, a strong set of financials in a relatively seasonally weak quarter. From a segment perspective, we had growth across all our faster growing segments. So if you were two segments, which is BFSI and retail, had negative growth. If you leave that aside, all other vertical industries had very strong growth, and we recorded 3.4% CC terms growth, excluding these two verticals. BFSI had a growth of 0.4% negative, and retail had a degrowth of 3%. Retail is facing structural challenges in the industry, which we'll talk about further. BFSI is more a cyclic or a more period-to-period change. We continue to see strong traction in BFSI and have expected to bounce back strongly as we go forward into the next quarter. From a geographical market perspective, once again, North America has a reported revenue down of 1.8%, whereas Europe and UK had strong quarters at 7.1 and 4.1%. Similarly, India also had a very strong growth. From digital continues to accelerate. For the quarter, we have close to 18% of our revenues coming from digital. We are now at a run rate of about 3.2 billion on digital. From people perspective also, we continue to hire strongly, and our net addition of 8,700 odd people in this quarter, and attrition again continues to track down, and we are now comfortably within our range with IT attrition only in the range of about 10%. So overall, given the economic environment and seasonality in this quarter, we have had a fairly decent set of performance, which places us well for our as we look into FY18. A few words about FY18. We spent the first 2 months, me and NGS, visiting customers primarily across North America, but across Europe and APAC as well. And a very common theme that we are hearing from all of them is a very strong focus on digital, continuing investments in that, and a balance of an investment agenda, a strong technology transformation and investment agenda, and a very strong focus on operations and efficiency, which I think plays well into TCS's core strengths. And we continue to stay focused on digital. We are focusing on three themes within digital as we build this out, given its size. The three themes being agile, cloud, and automation. And we are focusing the company more tightly around these themes as we see this playing out into our customer context. Finally, to end it, as I said, we see FY18 as incrementally positive and quite confident about the demand outlook that we see. There are few verticals that have some lingering pressure, primarily coming from retail. Other vertical like high tech, which had a soft full year, we have now seen 3 quarters of fairly strong growth coming into it. So we think high tech should do well. BFSI we think should bounce back from its cyclic lows, and that's what sets us up for FY18. With that, I want to hand it back to Pradipta, and we'll take it from there.
Thank you, Rajesh. We'll move to Q&A.